Annual inflation has risen to 7.8% in the December quarter. That's its highest rate since March 1990. Let's bring in our business editor, Ross Greenwood. Ross, we've been looking at this today. We've seen a lot of predictions, but this is actually higher than economists had forecast. How have we seen markets react?
Yeah, well, as you say, the highest in 32 years, Ash, and so there's no surprise here that markets did react pretty immediately. If we look at this rate, the annual rate at 7.8%, and most of the forecasts had really been around 7.5%, 7.6%. So it has surprised on the upside. The quarterly rate also is higher than anticipated as well at 1.9%. But you go on and look at what the Reserve Bank might be thinking about all of this. You can see here it's just a progression of price rises in Australia on an annual basis from basically the beginning of last year. And you can see this has kept on going. Now, Treasury does indicate that it believes that this could be close to the peak of inflation. But the Reserve Bank, of course, has to make decisions about that. It watches what's known as the trim mean. So that strips out sort of one-off factors such as potentially petrol prices or fruit and vegetables or something like that. But you can see here this is uncomfortably above an annual rate of 6.9%. It's 2 to 3% band of preference for the inflation rate in Australia, this trim mean. And this is perhaps one indication that the Reserve Bank will continue to raise interest rates. Now, because of that, you saw today that money markets affected immediately. The ASX 200, say, for example, did fall, and it's sensitive to interest rates, banks are. So you can see that fall there, and it's now down almost 0.5%, is exactly at 11.30 when this dropped. So this is the live price as we see it now. The second thing that also moved is the Australian dollar. So the Australian dollar is stronger here off the back of it. Now, the expectation of higher interest rates means the dollar becomes higher because Australia becomes more attractive because our rates here will be higher. And so the dollar's up almost 0.6% since then. So these are the factors really, if you like, that are driving the Reserve Bank in its decision making over the next few months.
So, Ross, when you look at the data, which prices increase the fastest, affecting inflation?
Yeah, now it's interesting to note some of the factors that were actually taking away from inflation include fuel prices, which had started to ease off, and even the price of building and construction. But the things that were rising fast here, you can see food prices. These are the annual changes, up 9.2%. Clothing, 5.3%. Housing, which includes, this is the annual rate, up 10.7%, and transport is 8%. But for the quarter, it was really all about holidays, accommodation, international travel, plus also then the cost of restaurants. So all of those had found their own prices rising, and so they've been increasing prices. And so just at the very time when most Australians were looking for a holiday, they found that their prices were significantly higher than they'd been before. Now, the truth is that Australians right now are absorbing those price rises. Maybe it's because they've got jobs, and most Australians have got jobs right now that want one. But the fact of the matter is, at some point down the track, and especially when a lot of people come off fixed rate mortgages, as they will later this year, a lot of people are going to find their costs are rising dramatically, including for energy prices and for mortgages. And so that's the anticipation that the Reserve Bank is going to be very careful with its interest rate rises, not to really tank the economy at a time when families come under pressure in terms of these rising prices around Australia.
In reality, though, Ross, does the Reserve Bank have any choice but to actually keep rising those interest rates?
No, it doesn't. And the reason for that is because it has to kill inflation. And it's had the stated aim of saying it will take no sort of, if you like, risk that inflation remains. And the problem is that if you do not get rid of this inflation immediately, then it sticks around for a long time. And that changes the flow of capital in Australia and even employment prospects. And given the fact that the Labor Party, plus also the ACTU, and indeed even the Reserve Bank itself, has said that their ambition is for full employment to be maintained in Australia, this is one of the reasons why, again, the rates will rise, even if it cools down the economy short term, to make certain that they can continue to achieve the full employment. Because for right now, the reason why Australians can cope is because they have a job, and that is absolutely critical. The Treasurer will be up shortly at a press conference, and certainly there'll be other reaction coming throughout the day as well, no doubt.